Like I say, I got organized here and don't know what I'm doing anymore.
I have a question, Professor.
Yeah.
For G, I put the cash in two separate accounts. So under automobile, I put cash as an asset decreasing. So I put it as a credit for 1,500, and then same with. Is that fine?
That's absolutely fine, and that's the way I would. If you're, especially if you're going into accounting, I would encourage you to do it that way, because you want to. It's good to look in the cash account and be able to match it up with the expenses. Mm-hmm. That's the way I do it. The only reason why I have it this way, this is the way the book shows it. Right. I try not to be. It's a tough call. I would do it exactly the way you did it, but the book shows it as one. So one of the worst things you can do to students is to show them a bunch of different ways of doing the thing. So the way you did it is exactly the way I would have done it. Because invariably, someone comes up and asks you, well, where'd you pay this from? And if you look in the cash account, there's not going to be a $1,500 entry. There'll be a $1,900, which won't match up, and then you have to kind of dig through and figure out where it is. Whereas if it was doing it the way you did it, if you did each one separately, there'll be two entries. There'll be a 1,500 and a 400, and you can easily find them. Oh, it's right here, 1,500. That's where it went out of cash. So, yeah. As an accountant, it makes your life easier to do it that way. I don't know. All right. So any questions on any of these?
I have a question, but it's not on the homework. It's just on the turn-in.
Yeah.
On Blackboard, it says like chapter or the handout part 1 turn-in and then the part 2 turn-in, and they're separate. Yeah. Is that like what we did on like not this week but last week?
Yeah. This week the first one we did was I can show you what it looked like.
It's the one with like it has like the question or the problem on it on the paper, right?
Yeah, it's got the balance sheet on there. You just kind of add. Yeah, it's kind of a quirky one.
So for that one, do I just like to turn it in? Do I just like split it in half and then turn in part 1 and then the other one in part 2?
Well, they're two different handouts.
Yeah, it's the one we did like from the book.
Here, let me put it on the screen. So this is the this is what the chapter 1. This is what the part 1 handout looks like.
Yeah. And we did that in class together, right? Last week?
Yeah.
Oh, okay. Yeah, I'm sorry. I thought I already turned that in.
Well, you may have. I haven't I haven't graded them yet. So if you did turn it in, I probably haven't graded it yet. And by the way, if you do turn something in and it's you turn it into the wrong thing, I can usually figure it out. I mean, unless it's something crazy. So if you turned in the part 1 and part 2, if you switch them around or whatever, it's not that big a deal. I can usually figure it out. I mean, don't test me. Don't try to do it, but yeah. And again, I think I talked about this before. The due dates are there to kind of keep you on track as far as going on in the class. But you can turn stuff in late without penalty. So don't, you'll give me calls at 11 o'clock at night, can I have an extra 2 hours? And you don't need to do that. You just turn it in when you get it done, and I'll put the grade in. I encourage you to, keep up and keep on time, but things happen and whatever. People get sick, emergencies and all kinds of stuff. Or you just don't feel like doing accounting at the time. I've done it myself. All right. All right. Well, if you have any questions on 2-2B, if you want, you can still stick around after class and do it. And I'm going to send out my my office hours. I don't know if I told you guys that or what they were, but there'll be a tab in Blackboard. But just to let you know, the office hours are going to be Friday, 2 to 3. I'll go longer if people are working there. And then Saturday at noon to 1 or longer if people are there. But also you can schedule a meeting anytime. Well, anytime I'm not teaching. I don't know if I have my schedule up or not. I'll have to post my schedule.
Yeah, I think you let us know that you have 2 classes during the day, one at night and one in art.
I actually have my night classes. I have night classes on Monday through Thursday at 6, so I can't do those. Yeah. So my schedule, as it relates to your guys' class, my schedule is from and every day I have it from 6 to 8:30. So I basically can't do night class, any night sessions from Monday through Thursday. I know that's a pain, but it's just the way it works out. But if you want to, if you have Friday, if you want to do it on Friday at 6, I can do that. I mean, there's, as long as I know, when to do it, that's fine. But I'm scheduling these hours that I'll be there. It'll be a Zoom meeting, a permanent Zoom meeting for those. And you're welcome to show up. You don't have to. There's not going to be any new material covered. But again, I hate to put this in here because people think they have to come at those times. You don't. If these times don't work for you, and I'm sure many people they don't, just get a hold of me and we can schedule a time to have a private Zoom meeting. That's fine.
If we were to visit you during office hours, like the scheduled ones, are they going to be the same link as in for our class?
They're actually going to be for any class. Having done this in the past, very few people actually come during the office hours. Now, if they do, I'll gladly add extra ones. And if there's, if one class has more than other ones, I'll have a separate one that only that class goes to. So yeah, and it really depends on how many people show up to them. And that if more people show up, I'll gladly add hours and add more times, and maybe even add separate times for separate classes. But yeah, right now it's for any class. Again, having done this before, I usually don't have that many people show up. If they do, which I'm happy to put more hours in, we'll schedule more. And again, if we have a lot of accounting 210, 403 students, I don't mind doing a separate one for just accounting, 210 and 403 students. That's fine. All right. Well, let's go ahead and get started on problem 2-4A. It's probably on page 98, 99, something like that. I know I did this before. I'm going to check the ebook just to see if it has a page number. I don't think it does. My eternal hope is that we have page numbers on it, but I don't think it does. Nope. Wait a minute. see something here. Maybe if I go over, can I go over? It's not letting me go over. Oh, I see what it's doing. Yeah, it doesn't have the page numbers. I would guess it's probably like page 98 or 99, somewhere in there. If you have the 14th edition, it might be like page 97, 98. Okay, let me. Oh, I'm still on my big old head. Okay, here we go. So this is the problem. Let me zoom this in a little bit. Okay, up here, this thing is something. I think we talked about it a little bit, but this is a trial balance. They call this one the unadjusted trial balance, and this is just the debits and credits, and you'll see they equal. We're going to learn how to do one of these in chapter 4. So in chapter 4, we'll go into this. I know they show it in chapters. I think they do in chapter. I don't know if they do in chapter 1. They do in chapter 2, obviously. But we're going to go over this when we're in chapter 4. We'll see how you make these up. Right now, these get made up from the journal entries. So we're going to learn the journal entries, and then we'll go and figure that out in chapter 4. This is actually a lot easier than it. Just so you know, so this is the trial balance, and these are the accounts. Oops, it's off the page. You can't see it. So these are going to be the accounts that we have that we're going to use. So if we're looking for the accounts down here, the journal entries, these are the accounts we can use. So you can look up here and kind of see which ones they have. You have similar ones. Every company has their own accounting names for stuff. I worked at a place where they didn't have payables. They called them obligations. They had account obligations. Everything was obligations. It was the same thing. A lot of times they'll have account numbers. They'll say these are numbered. And as you work in a business, a lot of times they'll say charge this to account 21, and that would be an accounts payable or whatever. So a lot of times you'll hear people who are used to using it, managers and accounting people, say, put that in account 248 or whatever it is. So a lot of times they'll identify it by the number rather than the account itself. You'll hear that sometimes. Okay. Well, these, zoom in here. And so this is, it's right here. So this is problem 2-4A. And I think you guys can do a split screen. I believe I am going to look at something so that you can see both of them at the same time. Okay, it's under view options and then side-by-side mode. So in the upper right-hand corner, okay, I'm going to do something I know is going to be a disaster, but I'm going to do it anyways. Okay, if you're seeing something really psychedelic on your screen, that's me taking a picture of my screen. If you go up here though into the view options, you should have split screen as an option. I don't have it because I'm the host, but if you go up here in the right hand corner under view, you should be able to do a split screen. Look how cool this is though. Woo! Okay, it's nothing that. All right, yeah. So up here there'll be the split screen. All right.
It won't let me right now because I'm on my tab. I ain't on my laptop right
There's no tab there?
now. No, I'm on my tablet device.
Oh, your tablet. There probably is a way to do it, I would think.
Yeah, I'm on my phone too. I can't find any option for that.
I'm on my iPad too, and you can just like go onto your home screen and then like swipe it up and then like pull out both of the tabs to the side.
Let me do a quick search here. Yeah, I know there's videos on it online how to do it. Apparently, as of March, you can do it. How you do it, I'm not sure. But there are videos on how to do it too. If you want to do split screen. But yeah, I apologize for that. One of the kind of quirks on this, I would like to be able to show on my screen like two cameras, but Zoom doesn't like it. So what I have to do is put this in my site, and that'll become the thumbnail. But usually it's somebody's face when they're talking, but instead of my face, you're seeing this, which is too bad for you guys because you don't get to see my face. But seeing the problem is a little more important. So this is it will be on the site. So hopefully you can work out something that you can see that with. Yeah. Or you could even pull up the handout and kind of click back and forth. That's another option. Maybe not a great option, but that's one of the options. Okay, I'm going to stop talking and okay. Let me do something here. I'm going to save it as working. Okay. All right, so we'll go ahead and go through here and kind of go through the journal entries. Now, one thing I want to say here is, though, this company has obviously been around for a little while. We don't know how long, but they have cash, accounts receivable, fees earned, or like salaries. They have all this stuff. So they've been around for a while, and they're this company that's up and going. It's not like they're just started up. So if you're wondering, well, how come we didn't sell stock? We don't have any owners. Well, you do have owners. They just happened sometime in the past. Okay, so number one, paid rent on office for the month, $6,500. So I think what I'm going to do is I'll put the accounts in, and then you guys can tell me whether they go up or down. So this will be rent expense because it's one of the expenses going out, and we're paying. It said paid, right? Paid, so it'd be cash. Oops. And I think I'm going to change this. No, I'll leave it for this one, but I'll change to capital trust. Okay, rent expense. The expense, is it going up or down? I'll give you well, what's more, 1 month's worth of rent or 2 months? Expenses are always going up throughout the year.
It's increasing.
Yep. And eventually at the end of the year, we'll have, in our rent expense, we'll have 12 months worth of rent, right? So on this thing here, we have rent expense. Yeah, it looks like they have rent expense for 30,000. I don't know how they got from 6,500 to 30,000, but apparently they paid. Well, it depends on when their year end. Anyway, so they're paying rent for the month 6,500, and it's going up. Cash going up or down?
Down.
Down. Okay, so this is April 1st, and I don't think they gave us a year. X or Y3, I don't know. I'll say 2000. I'll say 2023. Well, a couple years into the future here. Our choices are either 2013, which you guys are going to say, hey, that's when I was born, or 2023, which is future. And we'll go to the future. Okay, expenses. For making journal entries, we love expenses because they are always what? Expenses are always
debits.
Debits. I think there's one problem in here that goes against that. One journal entry is going to go against that today, but there's an error. But yeah, expenses. When you see expense, it's a debit. So, I'm trying to capitalize. Expenses are always debits, so this will be 6,500. And truthfully, you won't really even have to look up the cash. Asset going down. I'll put this in, but if you know one side of the equation, so we know that expenses are debits. Well, if debits have, stop that. Word being to if debits equal credits, okay, if you know what the debit is, then whatever the other account is, it's going to be a credit, right? Now, you can also look down here and we have cash, asset, it's going down, so you can look down here and do it. But truthfully, I mean, if you're in a hurry and have better things to do than make journal entries, when you get one side of it, you know what the other half is. Okay, number 2, purchase office supplies on account. Okay, office supplies. And accounts. I said I'd give you the accounts, but what accounts payable or accounts receivable?
Payable.
Payable.
Payable, perfect. Okay, office supplies going up or down?
Up.
Up. And the tricky one, accounts payable going up or down?
Is it going up because we owe more?
That's exactly right. Yep. I guess it wasn't as tricky as I thought. You guys got it. So they're both going up. Okay. This is Yeah, if you guys don't want to put the dates in, that's fine too, because it's they're right there. Okay, so let's take office supplies. It's an asset. It's going up. It's going to be a debit. At that point, we could really stop and just go back, but let's not. Accounts payable. It's also going up, and it's going to increase with credit. So supplies are the debit. Accounts payable is a credit. And again, you really only needed one of those to make the journal entry. Okay. $2,300. Okay. Paid insurance premiums. Looking at this here, one account looks like it might take the insurance premiums. This is a tricky one. So looking through here, the only one that you can see that looks like it might be the one to be prepaid insurance. I don't think we talked about this. There's some things you have to pay ahead of time, and you have to prepay them. Rent is one thing that sometimes you have to prepay. We didn't do it here, but sometimes you have to prepay the rent. But insurance is one you kind of have to prepay. You pay for the your car insurance every 6 months or whatever it is. You pay ahead of time, and then you as time goes on, you use it up. So this prepaid insurance is going to be what we're going to use. And prepaid insurance is an asset because this is paying it into the future. These are paying things ahead of time. And by the way, if you cancel your insurance, you'll get a refund for it. So this is actually can be turned into cash if you cancel the insurance on it. I wouldn't encourage you to do that, but yeah, if you do it. So prepaid insurance. And this is an asset, and it's going to be increasing. We just, I should ask you guys. It's going to be going up. So that's going to be an asset. It has a future value to it. All right, and what do we paid with what? Well, paid, so I mean, it's what, cash? Is cash going up or down?
Down.
Yep, we paid the insurance. I keep doing that. I got to do the bold and underline first and then do the... Okay, so this prepaid insurance is going to be an asset. You pay ahead of time, it has a future value that you're going to get this insurance coverage for going into the future. Or if you cancel the insurance policy, you get your money back. So let's go down to assets. And you'll see they have prepaid asset. Here's the one we're kind of looking at. And let's make that turquoise. So prepaid insurance is increasing with a debit. Our cash is decreasing with credit. And again, if you get one of these, you know what the other one is. So prepaid insurance is an asset. It's going up. So it'll be a debit. And you know, some of these you probably are figuring out that you don't even have to look them up. You know, for instance, we use cash so much; it's an asset. So cash goes up with a debit, goes down with a credit. Okay, 10, receive cash from clients on account. This is a tricky one. So we receive cash, so I'll put cash in. And the other one would be what? Accounts. Payable or receivable?
What the problem said he had on him?
I'm sorry?
I didn't see what the problem said. I didn't see what the problem said.
So it's going to be receivable. Yeah. Okay, so the cash is going up. Yeah. And accounts receivable, so this is what they owe us. And this is going to go down. I did it again. I do it every time. I think I've learned. Okay, so cash is going to increase, accounts receivable is going to decrease. Those are both assets. And by now you're probably kind of getting used to this. Cash increase, debit, and accounts receivable will decrease with a credit. Okay. And again, if you just know one of them. Oops. The other one is. These two have to equal. Okay. Purchase land for a future building site, paying $200,000, paid $30,000 in cash, giving a notes payable for the remainder. All right. So, what accounts are we going to have for that one?
Land and cash.
Land, cash, and we'll actually have one more. Land and cash are both correct. So we got land for value at $200,000. We paid cash of $30,000. And then what else do we have?
Would we have accounts payable?
Yeah, it probably put it under notes payable. Accounts payable is fine, but probably use the notes payable just because they have that up here. The notes payable. Oops, notes payable. Okay, so let's see. So this would be. Oops. Okay, so is the land going up or down?
Up.
Oh, good. Cash going up or down?
Down.
Yep. And now the tricky one, notes payable. They're going up or down?
It's going up.
Yes, perfect. We owe more money. We're going to owe whatever. I think it's 170,000. Right? Okay, so let's see here. Land's going to increase, cash is going to decrease, and notes payable going to increase. Oh boy, a lot of stuff going on here. All right, let's go down here. Okay, I don't know if we use arrows. I'm going to use arrows instead. Okay, so land is going to increase with a debit. Oh, look, I like the arrows. Cash is going to go down with a credit. Notes payable is going up with the credit. So notes payable and cash are both credits, and the land is a debit. So land's a debit, cash, and notes payable are credits. Okay, so let's do land first. Cash is an asset going down by 30,000. And notes payable is a liability going up. Now, the question is, how much does it go up by? Well, these two sides have to equal. So you get this 200,000 of land, you gave 30,000, so the rest of it's on this note. So this would be 200,000 minus 30,000. Oops, one more zero. Oops. Hold on a second. Oh, just me learning how to type. Oop. I keep getting the wrong thing here. Okay, so this 170,000, this is what we need for our notes payable. So it was 200,000 for the land. Uh, 30,000 was for the cash. So the rest of it, the 170,000, must be for the notes payable. So liability. So we gave up cash and we gave a notes payable, 170,000. Here's a question for you. How much did assets go up by on this journal entry? What did assets increase by? Did they go up by 200,000? Actually, no. The land went up by 200,000, but then we subtracted out 30,000 cash. So assets, these two are both assets, actually only went up by 170,000. And notice I got on our balance sheet that, you know, if assets go up by 170,000 and liabilities go up, must be by the same amount. Yeah. So these two, you know, together would be taken into account. So this is assets going up, assets going down, and yeah. I got a dumb question. Can you guys see my screen?
Yeah.
Oh,
Yeah.
okay. The reason I asked that, I'm getting error messages on my at the top of my screen saying close this window. And I've obviously resisted closing the window because we're working on it, but okay. 17. Paid creditors on account. Paid means cash or easy paid. On accounts, accounts payable. Cash going up or down?
Down.
Down. And the tricky one, accounts payable. Oh, I already put it there. It's not tricky when you fill it in ahead of time. Accounts payable is also going down. So we're paying off the accounts payable. I like my little arrows. Okay, so cash is going to decrease with a credit. Accounts payable is going to decrease with a debit. $66,450. Returned a portion of office supplies purchased on April 2nd. Okay, so 20, this is a return. Okay, so return portion of office supplies purchased on April 2nd, receiving full credit for the cost, $325. Now it says credit for the cost, so it's not going to be cash. It's not like they sent cash back. All right, let's go up here and see what we did on April 2nd. Okay, so this is what we purchased on April 2nd. Now we sent $325 worth of this back. So what's going to happen to our office supplies? Is it going to go up or down? If we sent back 325 of the office supplies. Is it going up or down?
Will it
Down.
decrease?
Yep. Yeah, so we're going to decrease. It's basically, we're basically going to reverse out that original entry for $325 worth of this, because we no longer owe them for that money, that amount. So it's going to decrease both of them. So we have fewer office supplies, we sent them back, but we also don't owe them for that $325. They give us full credit. Okay, so supplies are going to decrease with a credit, and accounts payable is going to decrease with a debit. So accounts payable will be the debit, supplies will be the credit. It's basically just reversing out from the second. $325. So our supplies go down, and so do our liabilities, because we don't owe them for these anymore. So you'll notice that this is just the opposite of April 2nd. We're decreasing our liabilities, our payable, and decreasing our office supplies for the stuff we return. So like undoing $325 worth of it. Save this for them. Okay. $23rd, paid advertising expense. Paid it with cash. Oops, not cash. There you go. Okay, expenses are always increasing. Oops, cash is decreasing because we're paying it. Okay, expenses are always, or mostly. Expenses are usually what? Debits or credits?
Debits.
Debits. See expense, you're gonna have a debit. That is my kooky phone, which I didn't mean to have down here. Okay, so advertising expense. Debit. 4,300. I'm so confident in that I am going to say cash. Asset going down. That's going to be 4,300 also. So if you know one side of it for most of these, if there's only two accounts, if you know one side, you know the other side. The nice thing about any expense, it's going to be a debit. Having said that, I'm going to go against it down here for 27. It's always a debit if things are done correctly. If they're not done correctly, then sometimes we have to change it a little bit. So I'm going to do this one, kind of go through it. Turn 27, discovered an error in computing the commissions, received cash from a salesperson for the overpayment of $2,500. Okay, so we overpaid a salesperson by $2,500. And surprisingly, the salesperson gave it back. So, wait, this isn't right. I've done all these wrong. Look at the dates I put on these. I did every single one of these wrong. April is the 4th month of the year. I learned that in 1st grade. Every single one of these is wrong. And even when I changed it down here, I realized I did it wrong. Okay. Brother. Okay. Okay, so here they sent us back cash. So our cash is going to increase. They return the cash. Looking at our paper here, the salary and commission expense, okay, that is too high. Right, we paid them $2,500, but we shouldn't have. So now we have to reverse that out. You know, I said expenses are always debits. That's me lying. If there's an error, you can run into a credit, and that's what this is. This is the error. We're going to make the correction. So if everything's done correctly, they are. But this is a for one thing, this is a very long account. Okay, so cash is increasing. And this is the one rare time when you're going to see an expense go down. Okay. Oh, it's even fit in here. I know, I'll put it in. Okay, so $2,500. Scratch that. I did this wrong. This is cash. So it's an asset going up 2,500. And well, a few times you'll see a credit in the expense account. And again, this is because there was an error. And by the way, errors are the hardest thing to correct in accounting. It's the one that people, have the hardest time with. And I mean, people have worked in it for years. Error correction is one of the more difficult things to do. Okay, so 28. Paid automobile expense. All right. Legal expense is increasing. Cash decreasing. And again, if there's no error, then we know an expense is always done. So whenever you see expense, again, unless it's an error that I really didn't put error corrections in these. So it's gonna be a debit. So any expense is gonna be a debit. There's nothing right in the upper level accounting classes. There's nothing wrong with putting in error correction, but when people are trying to learn, show them, that, oh, this was done wrong, and then fix it is kind of. Oh, cash and asset goes down. And again, if you know one side, these two sides have to equal. Someone here. So you know that if you got the debit, you got the credit. So anytime you see an expense, debit. Paid miscellaneous expense. I'm abbreviating that one. Maybe. No, that's actually right. I should go get my wife. My wife, I think I told you, my wife was a therapist now, but she was a English professor. And now she's a therapist, which is why I'm in the basement, by the way, because she does therapy, so the office is private. So the basement here, people walk through and see us doing accounting. Who cares? But you have to have privacy for therapy. Okay, this is the same as up here. So 4.9. It's an expense. Okay, maybe I won't go get it. Spelling it wrong again. So whenever you see an expense, it's a debit. 1,400. Okay, recorded revenue earned and billed during the month for $57,000. All right, well, let's go up here. And up here, looking at these accounts, it's not obvious which one's the revenue. I don't know if I have that in the revenue accounts or not. Do I have that down here? I do. So fees earned is going to be the revenue. And generally speaking, whenever you see that term earned, it's a revenue. If it's unearned, it's a liability, but if it's earned, it's going to be a revenue. So fees earned is going to be our account here. And we're going to call that a revenue just so it's a little more obvious. Okay, so we billed the clients. Have we received the cash yet? Did we get the cash yet for this one? No, we didn't get the cash. So we're going to have accounts. I'll do my high squeaky voice. I see what accounts we have. What accounts do we have?
Would it be receivable?
Yep. Okay, so revenues are going to increase. They are always going up, unless there's a mistake. And accounts receivable is going to increase. People owe us more. And revenues, kind of like expenses. And then when you see a revenue, you say, oh, yay, because.
Could you go back to that one more time? I didn't see.
Yeah, I'll give me a second here. So revenues are always credits, but yeah, I'm going to back up. Oops. So fees earned, it's a revenue account. Why they don't say revenue, I don't know, but. And then accounts receivable, but fees earned, if it's a revenue account, that looks funny. Revenues are always credits. Unless there's an error, revenues are always going to be credits. 57,000. And accounts receivable is NASA. Going up, we could go down and look that thing up. Don't need to. We've got enough assets going up probably to know that that's always going to be a debit. But also, again, just these two sides have to equal. So if you get a revenue, you say yippee, because now you know exactly what the debit credit's going to be. Revenues are credits. So if you get a revenue, it's a credit. Whatever goes on the other side, whether it's cash, accounts receivable, or whatever, it's going to be the debit. The second April 30th, paid salaries and commissions for the month, 11,900. Salary and commission expense. keep misspelling expense. Okay, it says we paid them. Yeah, it goes cash. Okay, these are increasing. Cash is going down. We paid them. And an expense. Yay! We know that expenses are always debits. So when we run into an expense, we say yay. Not out loud because people think you're strange, but anytime you see an expense, we can say it out loud. Who cares if they think you're strange? All right, and commission. To spell it correctly. So whenever you see an expense, it's a debit. So salary commissions expense, 11,900. And truthfully, you don't have to look up the cash. No, we probably didn't cash enough that we know the cash goes down with debit or the credits. We also know that I can't spell. So cash going down. And again, so if you know one of these, you know, and that's kind of the beauty of this in some ways, that if you know what the debit is, you know that the other one has to be a credit. You know, at first it's hard to get, you know, to kind of, at least for me, for myself, it was hard to wrap my brain around. I was not a great accounting student. I got C's in my first two accounting classes. You would not, if you just saw me in my first two accounting classes, you would not think that guy's going to be teaching accounting something. It made no sense to me. This stuff was just bizarre. When I finally learned, I was like, oh, okay, not so bad. Okay, 30, paid dividends. Cash. Dividends, the book I think tells you that they're increasing. The account itself is going up. Cash will be going down. I know we're going late here. If you guys need to you know, if you have other things to do, obviously, you're going. This video will be posted probably like 3 or 4 o'clock. So, you know. Okay, dividends. Dividends are always debits. similar to expenses, but they're not an expense. $4,000. So these are payments to the owners. Paid them in cash. I'm going to move this down to the last page. April 30th, the last April 30th. Okay, rented land purchased on April 15th. So on 15th, we bought that 200,000 land. To local merchants for use as a parking lot. In May and June, during a street rebuilding program, received advance payment of $10,000. Nice job, by the way. You buy land and you rent it out. You're already getting cash in from the $10,000. They'll make the payments for next 6-7 months. Okay. So for May and June. Okay, well, it's not May or June yet. So here's the thing. They paid this ahead of time. So they gave the cash, their cash. Now the account we're going to use is the liability account. And it's right here, unearned rent. That's an unearned revenue. I don't show anything in there yet, but we will put it, so unearned rent. And anything that's unearned is a liability. And we owe people more money now. We owe them the use of that land for a parking lot. I did that completely wrong. I said it right, but I put it in wrong. We owe them the use of that lot. And if we don't let them use a lot, then we gotta give them the money back. Okay, oops, let's go down here. Cash, they gave us the money, it's increasing. So cash will be a debit. At this point, you can stop. You know what the unearned revenue is going to be. But just for kicks, we'll come down here and do the unearned revenue. Will increase with a credit. So unearned revenue. The credit, cash is the debit. Okay, so it's likely going up. And again, if we don't let them use that land, then we gotta give them their money back. So we owe them until they use the land, it's an unearned liability. Excuse me, unearned rent, I should say. So yeah, it's a liability until we until they use the land. Okay, so that's PR 2-4A.
Can you go back to the first one, please?
The first journal entry.
Yeah. Thank you.
You're welcome. Yeah, so this is you guys, so the other one is problem 2-4B, and it's on the same sheet. My spacing, I moved up my spacing. Yeah, and by the way, if you want to do these by hand, that's fine too. You know, you can do these by hand. And if you don't feel like you need to do these anymore, you don't have to. You know, if you feel like you can just pick the two accounts up and jump into here, that's fine. But I keep putting them up just because it's to me it's just easier sometimes just to figure out whether they're increasing or decreasing and then put it in the journal entry. It's kind of a two-step process. What account is it, you know, and then what's it doing, you know, then do the journal entry. But anyway, so the PR 2-4B is there, and you can I think I set it all up correctly. I'm not seeing the one. Hold on, I think I may have done something wrong with this one. The setup. I think there should be one that has a 3. Oh boy, okay. The second to the last, no, third from the last. There's actually 6 on August 31st, which I know is kind of a lot. If you go to page 7, and the second one from the bottom on page 7 is you're going to have 3 accounts. Well, you have 3 here, but anyway, you're going to have 3 accounts. You have 3 places here, anyways. But yeah, so on the 31st, there'll be 3 accounts. And then, on the third from the last on the bottom, it says what a future building site, paying 75,000, 7,500 in cash. Similar to what we did on the other one, but yeah, so you have to have a third account on that. Okay, so we can see it.